I'm going to do my best. Hey. Um, hey. So, this is going to be a fup. This is going to be one of those streams. Let me tell you guys. I don't know if you all feel like I'm crazy sometimes. I feel like I'm crazy sometimes. I think part of it is this kind of what feels like ad lib or something, where you're just kind of like, well, this didn't work, so just do something different, and you can throw spaghetti at the wall, and that's not what I was trying to do here. But I do have to be realistic about it. Throw something else at you. I don't want you to feel like, well, great, it's completely different. Nothing is completely different. It's a Friday. It's October 17th. Yeah, this is a question about AMC bottoming, and I think, well, let me just start with this. So we've had a few different ideas about what a bottom looks like. We've talked about kind of the generic picture, our ideal bottom, maybe 265, maybe 246, maybe 232 or something, 237. Those numbers are still there. I don't think those numbers are wrong inherently. And I think sometimes the simplest answer is probably going to be the one that works out anyways. So those numbers are still there. They're not gone. They're not meaningless. They're not impossible. They're not scrubbed away. So again, 265, 246, and then, well, it's really 266. Sorry, I keep saying 265, but it's like right below 267, and then 245, and then 238. And those are numbers that are representative of the bottoms that we want to see if there's a strength test at, and it makes the most sense to have them there. There are other numbers, and we're going to explore today, like 180, which has been brought up so many times that I would never even dare to claim credit for that one, because there's some kind of a overarching kind of view that a lot of people are getting that number, and I think there's a reason for that. And then my weird number, which is like 226, which has more to do with a shift value, and it could end up being like 225 or something like that. Like, who cares, right? So these numbers are not gone. They don't disappear because we have new ideas or we have a different kind of approach to the chart. When folks come on here, a lot of times there's this idea that like, you're always changing things or something like that, right? And it's like, no, that's not really true. When we look back at, and I'm purposely doing like a penny too low. Now these numbers seem kind of shotgun, but like they're grouped together. So like these three are all strength test bottoms. These ones are booksy stuff. I don't know. They're just weird things that come up a lot. And I will include 180 on that. I'm not going to include anything lower for now, but those are the numbers that I'm watching for potential bounces and bottoms. Now, 274 came up recently, 275, something like that, because bigger picture, there was some interesting things that I was finding, and I was like, it's possible because of this dip here that could be it. When you look back at 2024, the final iteration just barely drops what looks like a rising or a triangular motion, so to speak. This is my 2 cents on that, okay? So first of all, there's no evidence that has to happen again, other than the fact that it's possible. Like everything in the market is possible. The second thing that I would bring up is that while that's true that it did just kind of dip there in that 2024 area back here, there's like this triangular build out, and then it just barely loses the triangular build out. That is true. However, if you look at where we are now, the triangle is not quite as simple. Like this one comes from the bottom, and it doesn't really make sense if you draw it from the bottom. There's no way to do in 2024 to come back here and do a triangular bottom that makes any sense. It just doesn't. Instead, you'd have to use really what I would say is the proper one, which is like this narrowing motion that occurs here. And you're really using what I would call like the two iterative bottoms. Like there's two dips right here that are between iterations where you're basically going back up to sell off. It's the lower portion of the wave. That's what I would use. All right, when I talk about this dip, I can't really do that here. I would love to be able to do that here, but I can't. I kind of have to assume certain things about this in order to make that work. And I don't know if that's appropriate at all, but that's the way that I would do it. So like the two particular dips that we'd be talking about are actually forming right now. I mean, there's not really any other. It's this one and this one. So the suggestion would be, and I'm using this bottom chart, and I'm going to get to this in a second. This is something that I would consider like probable that these two create a bottom and then that later it breaks. But if I were to use like the bigger picture, that one actually just broke today. So if you use this bottom trend, this is gone now. And it did break down. I'm using this chart because it's just a little clearer. So it kind of just depends on which one you use. And that's not necessarily the most helpful thing, but certainly it's a reality here. In addition to that, you also have various creeks that we could use on the top to kind of establish the top area. I've used what I think is like a macro downtrend for quite a while, and I know that for a fact that this pushed out above that. However, that's the one that we just pushed up on the 6th. And I would say that that's a fact. Locally, it does look like it pushed up, but it's kind of like a mixed bag because it depends on where you kind of draw the top. So you can see I've got kind of projections here going all over the place. And this one doesn't actually go that far over the top. If it does, it's like very meager. So one way to look at this would be to suggest that, well, it's a triangle. Don't make it more complicated than it needs to be. But is it, right? Like, I don't know. And any of these could be some kind of a parallel structure as well. I mean, you can kind of come back and see like, well, if I use these two bottoms, it's not even like a question in my mind. Like that's where it actually is because this was the resistance, this is support, and now this is like coming down. And it gives you quite a bit of room, right, to drop here. I'm going to say this. I think that all of that is probably correct. Meaning if you decide to use it one way or the other, as long as you're consistent and you're correct about your markings, I think it's going to work out for you. I don't necessarily think that one of these is the more superior way to chart it. Because this, for instance, would give us a window down to maybe a low that's still within the range. It doesn't really affect that much, okay? because your estimations would still be like, oh, it could drop down to here, and that's close to the bottom at 246. I don't think that the market, the charts as we see them, tend to be that so convoluted or whatever that they don't make sense. Usually there's a rhythm to it, and it does make sense. Okay? All right. Just getting that out of the way, because I'm going to talk now about something pretty new, and I just wanted to repeat that, like, while there are similarities to certain setups, and that is very important, I also think it's just significant to just remember, like, big picture's absolutely still going to be the most important. You still have certain bottoms that were key levels, and I think those key levels are still there. You still have a resistance here. Even if you don't know exactly where it is, if you're like, well, I don't know, man, I've been drawing it this way or I've been drawing it that way. Look, I appreciate the idea of, hey, it pushed over a creek, because that tells you, like, hey, if it goes down, it's going to be bad, right? Like, it could be really bad. But remember, like, a creek is flexible. It's not like a trend. It does not have to be like a trend. This is the creek as we can see it. Whether or not you can draw a straight line over it doesn't really matter. And the thing is like, in the end, this is going to break with a surety to it. Like, if and when this goes, and it goes over like 3 to 320, and it pushes up here, it is not going to be a question about did it break out, because it's going to make a higher high than this previous iteration. It's going to be above the creek, and when it comes back to retest it, it's not going to drop back down through it. Even if it has like a deep retracement, you're not going to lose it. So I just want to make that abundantly clear that, like, you may not know exactly where that line is, because there's like 6 different things here. They all look kind of off for one to the next. But just remember, like, the creek is pretty flexible. It's a resistance. It's going up here. They did push, I think, in advance, because all of those lines got pressed a little bit on that push, and that's important. But at the end of the day, like, a jump is going to have a higher high, and it's going to make a higher low here above the creek, and then it's going to go. Super simple, okay? If you want to do nothing else on this chart, if you're like, man, I like Booksy's stuff, but he's all over the place, just remember that, like, this is the bare minimum, for what you need. You need the higher high, and you need the higher low here that does not drop beneath the creek. Sometimes that can be quite violent depending on how steep that creek is. You might get a big upthrust, a big drop, and then it goes. But on the whole, this is common sense. Okay? Very simple. That's what you want to look for. If you don't know where the bottom is, don't try to catch the bottom. It's that simple. Don't try to catch the knife. Instead, just wait. And there's going to be folks that are going to be like, man, I don't want to miss out. I just want to keep, then just buy shares. Like, shares don't expire. Unless the price goes to 0 or they delist, you can keep them forever. And so that's yours. You don't have to worry about it. Excuse me. And I've encouraged people that do trade options to just be really cautious and don't try to catch the timing. Like, I've said that before. But listen, back in 2024, those options did not grow that much on that morning when it broke out. Were they up high? Yeah, but remember, it traced all the way back down to like 318, and then it ran. Now, I know that stinks. You're like, well, I don't want to have to sit here glued to the computer every day. Set an alert, right? That's the best way to do it. Set an alert for where you think that breakout level is. I've got my alert right here at 298 right now. There's reasons for that. I'm moving it down as we go because I want to see the earliest part of the action. But, like, set an alert. You don't have to watch it every day. If the alert goes off, then you go look at it. Yeah, you might need to be quick if you don't have a position and it does start moving one way or the other. But it doesn't have to be, you don't have to understand every little thing in the market to know that this creek is pretty straightforward. I mean, I think that this is one of the most simple ideas that is probably going to be the most effective for most people. And ultimately, like buying it here at $3 or something when it jumps, and if it continues, you hold it. If it doesn't continue, you get out, right? But if it continues, you hold it. You're not going to miss out on the majority of the move. Like 80 to 90% of that move will be afterwards here. You're not going to miss it. Okay? I'm saying that as a form of encouragement because every single day people ask me like, "Have we hit the bottom or is this it? Is this it?" And to be honest, I think that the setups are in a position where they're about ready to go. And I've been saying that for, well, since about mid-September, about a month now. I think I did a video saying that this looked really good. And I still think that because in the end, I don't know when the iterations stop, but I do know that they're starting to change character. And that's a positive sign. One positive sign here, and I'm going to kind of get to the main meat of this video here in a second. And you guys are going to either love this or hate this. So I'm going to preface it with that. But I'm trying to go back over the basics here. One thing that was positive was this push up on the second move. And then this push down is actually positive as well because it's changing character. We got this up thrust. Yeah, it stinks, but the purpose of that was probably to drive the price down. And that makes sense. And I told everybody as much on the Discord that like, that's not always a good thing. If you go above the creek suddenly, you don't want to see that big volume and then drop back through. Usually it means you're going the opposite way. But a strength test that goes to the upside often does go to the downside about the same. It's not always the case. So, this to me makes sense if this is a strength test above the creek, that maybe it's that triangle we were talking about, broke above it. Now it's going to go down and test low. I also have been doing the, I have shares. If you're asking me, I have a lot of shares. If I have to look at this and just time it out, I've been doing iterations just purely based on ratio. I don't know if this is going to prove to be correct, but thus far it's been pretty accurate. And it's about a little bit more than a third of, no, a little bit less than, well, a little between like a third and a half. It's kind of a tricky one. So yeah, I mean, that's a bit odd, but it's about this much compared to the previous. And I think this is it. So I'm like pretty sure that's the end of the iteration. And we talked about this before because we said that this is probably going to be the sell test. And the main goal of the sell test is to make the lower low. You have some kind of a move back up to the upside to redistribute. They look like falling cat ears here. You have 1, 2, 3 consecutive lows. We have 1, 2, 3 consecutive lows. A couple days ago when I was like, man, it kind of looks like it could just go on Wednesday, I'm looking at this local area like, yeah, I mean, that looks pretty good. It could have just a dip right here to like 278 and come back above. And then I said, if it doesn't do that, then you just see that this actually wasn't the third bottom, is what I said, and that this is going to just form another low. When you zoom in and you look at it fractal-wise, it looks pretty much the same as that bottom. So my expectation is actually, at least for now, that if it iterates again and it does nothing, like there's no change of character at all, you're still going to get this kind of creek cross, but then it's going to go up and probably only come back to about 291, and then it would drop again. Unfortunately, this could take all of next week. And I said previously that I thought it was going to end around the 24th, which is a week. But I remeasured it today, and I was like, if you take away, and it would have to be like, again, with the consideration this extra time gives it, which is about 2 days of extra time. Well, unfortunately, remeasuring it, I'm like, it could definitely last till November. And that's not what I wanted because November's earnings for AMC coming up on the 10th. And so I was like, you know what? If these operators are just going to kind of jerk a chain and mess around with us until earnings, which is totally possible, I guess, this thing could be going parabolic down by then. I've got it just sideways. But really, there's no telling because it already broke low here. If it continued to break low, does that make sense? You're going to end up in a situation where it could be like basically going parabolically down faster than we can imagine, especially if you start seeing big upthrusts and then break significantly lower on the next iteration. So I've got this extremely like sideways right here, but I just did it just to see if, like how far I could go. It gets really small. Just a simple ratio the reduction takes you pretty much to Friday the 7th. So that would be ridiculous. It'd be really tiny. You wouldn't even be able to see it. But yeah, I mean, I guess it's possible. If they kept reducing it at the same rate and didn't move it anywhere, could this continue to last till earnings, whenever earnings is officially announced? As in terms of, this is Monday, approximately the 10th. But yeah, I think so. You know, we've got the possible catalyst of Halloween, and that's about as far as we could go. It's a Friday, so that's a big deal for movies. That Halloween lands on a Friday could be a positive. We'll see. That's it. That's all I got to say about the fractal and the moving iteration, because there's nothing else to say. It looks like the same thing. It did the exact same thing. Has the right markers. There is a change of character. It did push high, and now it's pushed low. It's broken that trend from the previous two bottoms. They are consistent, at the very least, you could say that. So how do you know when it changes? Well, it changes. It doesn't do the same thing. It doesn't keep having the up thrust. These are roughly 618 retracements. So if you go from the second hit where it had come back up to redistribute right before the big low, or right after the lower low, excuse me. So you'll see it makes a low, makes another high, makes another low. It's kind of like a 1, 2, 3, 4, 5, but it's getting weaker, right? And then if you take that and you do like a 618, this has been consistently the same. So that much is apparent. On the next iteration, they're just squashing it. So again, that retracement here may look a little low, but it comes from the bounce at 3, and then there's another one here at like 297, and one of those would be the right one. I think it's this 297 actually. I think it's this guy right here, and then it's sliding down. And so there's a mix, maybe a little bit of a mixed bag there, but it's basically also consistent with a retest on these parallels. These are pretty darn similar to the parallels I had before. The ones I had before were a little steeper. I was looking at the hook from here to here. So those were steeper set. This is like a less steep set. This one's very consistent. They're just copy pasted. So again, that's where it is, at least for now. And I would suggest that, yeah, when you see a change of character, you know, at some point, I said it could go parabolic. I'm serious about that. Sometimes iterations, when they get like this, especially in like a cat ear kind of a setup at the very end, you might get some really extreme pushes up, but then they're doing that sometimes to sell back down farther than what would be an average here, which is pretty tiny. Okay. And certainly if you're going into like a catalyst event, that could cause some upset as well in the patterning. I don't have any questions about the iterations. I just don't. I'm if there's one thing I'm pretty confident about, it's this part of it. If there's something else that I'm less confident about, I'll tell you. But this particular setup is just, it really is exactly the same every time. They're making a mark, they push below it, they come back up, redistribute, drive back down the parallel, same old, same old. And they're just exhausting the same pattern. And they started doing that back in really, it starts with the very first push-up, the May push-up, and then the later LSPY that happened in December. It's pretty much identical. So it's just a distribution model, but it's pressing into a corner. It's not going much lower. It's staying kind of elevated at the end, and that's good and bad for different reasons. And we don't need to get through all that today, but all right. So what is this video title about? Why did I have a cryptic video title? Okay, so yesterday I was messing around with 8K filings. So an 8K filing, if you don't know, is the filing that they put out when they have an offering. Okay? Now, within that 8K filing, they have like a bajillion pages. There's like 160 pages, and then they have different sections. And then what they often do is they share a summary of that with the public. And I thought it was curious because in the previous one that they posted, which was about the Prospectus 5, that's the one that you're voting on going into December 10th, they referenced the previous offering, and they said that if we do not approve to have another, 500 million shares available, then they're going to have increased interest according to this deal that they made with, I don't remember the name of them, Murica. I don't know. It's Molvita or Molvira or something. I don't know. Some great debt collector person. Anyways, that assume their debt. So I went back and I looked at the previous entity offering, which completed back here in June of 2025, which was this year. It was really July 1st, but it was like right there at the end, okay? And then, so I don't know why I said June. It's July 1st. And then previous to that, we had another offering that was announced on December 6th. And during that process, I looked at the numbers that were there. And one thing I thought was extremely curious was this trend that came up from effectively, that came up from this number, which was 491, and then this number, which had to do with the opening and closing values, okay? The opening and closing values of the ticker on the day of. So I looked at the opening and closing values, and then I found an average of those things. And I thought it was peculiar because there were a lot of really bizarre little things that came out of that, those numbers. And I started wondering, what is this value? They posted it in that 8K filing. They referenced it in the recent release where they were talking about Prospectus 5. They said they can dilute. That means they can buy more shares. They have the option to buy more shares. There's a specific number that they can buy, and they have the option to buy those shares at a particular price that was disclosed in the 8K. I went back, and this might be the first time I've ever used AI, but I was like, I can't read 160 pages. I asked the AI, and it couldn't find it. Basically, they said it's not publicly disclosed. You'd have to go to the official SEC filing. And I was like, well, isn't that what this is on the AMC website? But I'm like, all right, fine. AI is not going to do it for me. I'm going to go look through it all. And I did. And what I found was a whole lot of formulas. I couldn't find like a specific number because it has to do with their formulas are about converting value before an offering so that it equals whatever they want it to equal after the offering's done. So they're pricing in the offering when they're giving the offering. And then they have a bunch of other stuff in there. It's like 20 pages of explanation of figures and then formulas that use those figures. I gotta be honest, guys. I'm not smart enough, nor do I think it's a good use of my time. So about an hour into that, I was like, forget it, man. I don't need to know why. I just need to know if this is an implied variable that I can use. And if it is, where would it maybe lie? And there was an interesting factoid that I found when I started messing with the numbers as they were available. So I'm going to try to pull up that chart. Hold on. I have a picture of it. I did a lot of stuff yesterday. A lot. Maybe too much. But what I wanted to know was what the heck is this number that they're allowed to buy shares at? Like why, right? Why are they not releasing it? And then why would they do that? Like it doesn't really make sense to me, I suppose. So let's look at this. So basically, this was the number. They had 69.8 million shares that they settled for 142 million. They have an option to buy more for like 190 something, okay? And then I went and just did a comparison. I looked at those levels. I thought it was extremely odd that this particular line, and we're going to get to it, this particular line goes back to that date where the price was effectively split. Okay, so first and foremost, the July 1st date and the December 6th date point back to the split date as if it's a ceiling, which makes some sense, but also doesn't make sense. Because I was like, well, that's weird. Why would it be in line with that? It's just kind of strange. But then I started thinking about how GME had that 24 number, and every time it pushed over 24, they diluted. So I thought it was kind of odd, but I thought, maybe AMC's is like that, and this is kind of like the dilution line where it's pushing back or something like that against that line every time there's going to be a proposed dilution, and it's losing value, and so it's this kind of negative slope because every time they add more shares, you're decreasing value or something like that. And I said, well, maybe that's where the iterations kind of come from. They are fairly close. They're not in the exact same spot, but they're fairly close to a similar area of the chart. So I was like, yeah, it's possible. But this one clearly, if we're just looking at it, it goes over. So anyways, they have this option to purchase $194 million worth of shares at some particular price. But then this is what I noticed that was peculiar. And you guys are going to be like, oh, that number came up before. And this is the most peculiar thing, perhaps, is that they actually, if you look at that number and just divide, that means that they bought shares for $1.78, right? I've got it on the chart already. They bought shares for $1.78. What you're about to see is going to come full circle in a minute. But the first thing you're going to think about is that 180 mark, right? Because you're like, oh yeah, I remember that 180 mark. We've been talking about that for a long time, and I'm not the only one. There's a bunch of people that have come up with it. Why is 180 so significant? And why do you have this weird bar chart down below here that looks like this drop ledge is on 180? Like, that doesn't make sense versus like this $4 mark. I don't know. I still don't know. I'm going to give you the spoiler alert on this part. I don't know why they were given it for that price particularly. Like, I can't tell you exactly why. What I can tell you are the numbers associated with it. So, and that's where I'm kind of like, maybe it doesn't really matter why. Like, we want to know why, but at the end of the day, like, maybe it doesn't matter why exactly that's the case. Maybe it's just more important that the numbers make sense, and then we can kind of infer what we need to infer from there. So I started to test out the numerical values here, and what I found was that if you do a, like variably, if you do like a 50-50, and this is where the plot thickens. If you do a 50-50 around this level that they were at here when the shares were offered, you actually find that you get the 491 mark, which I find to be peculiar for a number of reasons. First one being that essentially when you do that 50-50 from 178 to like where that is in the middle, like 295, you're starting to see that there's like a barrier here that's like a 50-50 mark back to the December date. That can't be a coincidence. Like, numerically speaking, if you're doing a formula, like, that doesn't make any sense to sort of divide it and be like kind of split in the middle. And so then what I did is I took a series of measurements around those markers to see where those things are. And here's where things get really, really interesting if you care about that kind of stuff. When you go back to 491, it is extremely close to the 485 that we used to talk about all the time. And the reason that was significant, because back here in February on that earnings, and then shortly after the May earnings, around, it was like May 28th or something like that. So about February 28th to May 28th, Vanguard had 2 filings that they made. Both filings on the day that those things were filed dropped the stock. They showed a short position open, sure, but they also showed a long position open at the same time. Those were revealed at the same mark at 491. And then 491 ends up being this level that we drop from here, and they're given an offering that's completed on July 1st, 2025. So again, this is quite a long ways after. During this sell test period, their offering is completed here. We don't know if it was all at once or what, but it's completed here. And I think the original date is like June 22nd or something. So it couldn't have been like that long between the offering and the completion. I got to go back and I have to double check that, but I think that's right. Something like that. Anyways, the point is that number then, if you look at 491 to where that offering is completed, it's a double value down to the 178, which is the number that they were given. Like that's what they bought the shares for. I find that to be extremely peculiar. And here's the number one reason why. When we came down, I don't know if you guys recall, but you probably do because it's traumatic. Back here in November, remember, of 2023, in October, November 2023, there was an offering made. After we had already had the split, there's an offering made, and it's made up here around this like $10 mark. It's like $10.09 or something like that, right? And then we go into this sell down period, and we come back up to retest that zone at a later time. This becomes what I would say is like the iterative motion, right? We have a similar story here with dilution announced. We have this sell down period. Here's the ledge that you get. Just like we have, again, here, this giant gap and then a ledge. We come back to that ledge later. We come back to that ledge later, and that's at like 410. And we're walking down incrementally in these iterative motions as these dilutions are occurring essentially in the right spot on these iterative motions. I just thought, man, that's really weird. What in the world does that mean that they got these shares for $1.78? Odd, weird number, I think, to sell shares at when the price wasn't even close to that. So you're kind of left wondering, like, what exactly is going on? And the only thing I could think of, and I was thinking about this as kind of carefully as I could, although I was like, maybe it's not this complex, but I was like, maybe there's something to it. And you can start inferring what you want to infer. You can think, well, it's going to go down to 178 now. Okay, well, the basis for that would be that the operator is trying to sell down and get these people to get out of their shares. But the truth is they already made money on them. They're already up like 100%, if that's really what they got the shares for. So that doesn't make sense. So either they're giving them these shares with the objective that you're going to sell immediately and make a bunch of money, or this internet is janky garbage. It popped out for just a second, but I think we're back. It'll be all right. Sorry. So I'm looking at this number like this is a weird number. And then I'm starting to stare at 491. And the more I'm looking at it, the more I'm staring at it, the more I'm starting to think about, I don't know why, but my brain, I was starting to think about how I was like, man, it's weird to me because when I'm using the shift chart, it seems like these are similar numbers, but for different reasons. And I started looking at the objective numbers that were being presented to me, and I'm starting to do this math and all this other crap. It kind of side rails, so here I'm going to be like jumping track a little bit because you're like, well, I want the answer to that. I don't have a complete answer for this. I told you guys I don't think I'm smart enough to figure out exactly what the number is. if I had to guess, and I can't, again, this is just a guess, I could say something like maybe the goal there is that they can sell or they can buy, again, at an average at a certain price. If it exceeds a certain price, they're allowed to have another offering. Curiously, the offering value-wise is different. So like the first one they were given for, and I don't remember the numbers, but it was like a lesser amount than the second. Just common sense would tell me that if there was an equivalent exchange, if they were trying to do something where they were trying to get them to buy the same number of shares, but they cost more, then that would naturally be the way to figure out what the price is. And so I was like, well, maybe it's the same number of shares, right, at like a higher price. And I think that's possible. When you do that, you can find some values, again, that are kind of in the squishy middle here. But I thought curiously that this was set up very similar, and when we talk about these iterations, we're talking about wave formations, really, really similar to what we see at the 491. And it's possible, I don't think it's the most likely thing, but it's possible that that's the number that they're trying to get to. That marker on the whole, I mean, 181, 180 makes sense on this chart too, for like a number of reasons. And we found it like multiple times. It's a crossway intersection of a lot of creeks. There's all kinds of stuff there. There's no question in my mind about why that number makes sense. The question would be, why would they have been given that offering at that time and given the opportunity essentially to sell for an increased profit? I don't know. They got a bad deal, it sounds like, or AMC got a bad deal because they're giving away shares for a bargain price, basically. We've seen it the other way around at times, if I'm not mistaken, but this is different. So we're talking about you're giving them away at discount here, and that's where I was like, I'm a little lost. So I thought maybe it's an average, and that's where I came with the 491. And then I thought, that's very curious because 491 is this level that was used as an anchor point. Clearly, they're aware of where the range top and the range bottom are. Clearly, they're aware of maybe those implied moves. Clearly, they have some mathematicians that work for AMC that are probably giving these numbers and these datas in accordance with certain things. Is it predicting the future or is it something else? I don't know. I'm not going to be able to answer that question. So if you really want answers to that question, go look at the 8K filing and see if you can figure it out. I could not figure it out. I looked for well over an hour. It's a very long, dense document. I did searches. I did all kinds of stuff. I could not find an exact value for when they are allowed to buy more shares. But just looking at the numbers, you might be able to insinuate some things. So again, 491 stands out because I'm like, well, technically it's, if you had shares at 178 and it went up to 491 and you bought, I don't know, a roughly equivalent amount monetarily, then you'd have an average of this price. But I was like, that's not a lot of incentive because I mean, like, if it doesn't get there, you still make money. So who cares, you know? It'd be a better incentive if it was just like slightly higher and it kind of makes you want to buy up. What I'm almost more curious about, and I think I have the note on one of these, what I'm almost more curious about is, so again, this is that marker, is like where that marker is, and then this is all this other crap that I was writing down about it. And then specifically like what the heck is the operator doing then? Before you get confused and you say, well, isn't the operator the same as this person that owns the debt or that was given the exchangeable notes? Wyckoff talks about composite operator because there's always more than one. So the fact that this operator has like 70 million shares is quite significant. It does give them a huge amount of leverage on the ticker if they hold those shares. And you have to think about them selling those shares too. 70 million shares is a lot of shares. when we dropped from the Judge Zern decision, Vanguard loosed like 60 million. And those are the kind of things that can really instigate and like kind of force sell-offs to happen. So just keep that in mind. But then I'm like sitting here thinking, well, why would an operator be like chopping it here? Let's say it's Vanguard who's actively moving in and trying to manipulate things as the kind of the alpha emu of the operator group. Is it possible that they're, as the kind of the bigger dog in the fight, that they're doing something different and trying to kind of work, maybe not for this other operator, but possibly even against them a little bit to get them to sell their position? It's possible. And we might be seeing that every time this pops up, that they own more, or they own less and less and less. They may be selling some, right? I just thought it's really curious because all of this is happening on what could be considered like a potentially like a major trend line. Now, this wasn't the trend that I drew. You guys are like, well, wait a minute. I thought you said that it was a little higher. You just talked about the beginning of the stream. Correct. The one that I drew was like slightly different. Slightly different. It goes back to like a lower angle because it catches the tops from November 2024 area, August 2024. It also catches where we broke out in January. That one is kind of slightly higher here because you could tell if you pivoted it, it would be slightly higher here. But it's overall, it's pretty similar. If you're looking at this as kind of like a wheel and there's like a radial amount of symmetry here, there's probably a lot of lines that pass through this middle where this pivot is and the stock drop down. Okay, so just keep that in mind. Like, this looks like, oh, it's just going to drop down to there and then it's going to go, right? Well, maybe. I mean, the weird thing about it is I went ahead and was like, all right, let me chart that line. I kid you not, if it were to just drop to that line, and it's not on the chart that I'm showing you right here, but if it were to drop to that line, immediately, let me see if I can find a better, it actually, if it dropped down to that line right here, it would go to $2.26. Now my interest is piqued because now it's not just about an offering and understanding like when are they allowed to buy and sell and why do they have this share price and da-da-da-da-da. Now that the 226 comes up, just look it up on Google and it'll pop up, and then you can go to the AMC Investor Connect and they have all their information there. It's a slog. If you want to do it manually, go to the Investor Connect, go to the documents, and you're going to have to go back to this time period. But there's an addendum to it that was more recent, and that one doesn't include the whole thing. So just keep in mind, there's two versions of this. One is the addendum, which is like adding to or changing the document. That one will not show you everything. You need to find the one, it's like the 22nd of some month. I can't remember off the top of my head. Find that one because you won't miss it when you're going back. It's like 600 pages or something. And it tells you how many pages are on there. It's big. So this is where things get interesting to me because I'm like, listen, I think this iteration's coming to a close. And then I looked at where does that number lie towards the end of these iterations. I'm like, if this just dropped back down on top of it, it would hit the 226. Now you guys are like, well, what's some of you are probably like, what's the big deal with $2.26? The chart shift. The chart shift value. Oh, okay. So you just think it has to do with the chart shift value. But the chart shift value is just representative of like a price in the past as it relates to the original price of the stock, right? Like it's not a real thing. It's just there like to represent possible like conversion, I suppose, backwards without ape and all these other things. I'm like, yeah, that's true. This gets crazy really fast. Talk about a rabbit hole. Because again, I'm like, that's a particular number that I'm very much like in tune to. I'm like, okay, that's a number I need to pay attention to. So I went back and I looked at the top. I was like, all right, let's go back to that 491. And then I'm going to go to that top and bottom region. I'm going to pick out some markers here. And then what I did is I decided I was going to measure. It's like, well, I know what the shift value is there. I'm going to measure from here. You're going to blow your head a little bit here in a minute because this is like bizarre. I went to the top, right? And I think that's like $5 and like 56 cents or something like that, or 54 cents. I don't know. I don't remember exactly. But I measured, and I did it precisely to the penny. I measured to the penny from the top in December to the top of the shift chart in December. I then put that down so that the top of the current chart went to a new bottom. It's $2.46. That is impossible. Because I'm like, there's no way that that's correct. And I did it again. And I was like, wait a second. So you're telling me that exact valuation of 226, the one that we use 226.36%, that valuation that you find through some weird formula that you did back in December, because of they said something about $10.60 or something like that. And I was like, what does that even mean? Right? If you invert that number, it gives you $2.46, which is exactly where the next bottom was. Now it's real, because not only does it have to do with these offering numbers, which I've already told you, like we got 295 and we got 491. Those are significant variables regardless. Not only does it have to do with that, but all of a sudden, this number, this little magic percentage number that Booksy found, which we don't even know, like maybe I'm right about what it means, maybe I'm not. And I'm starting to think I'm not. I'm starting to think it's something else, and I'll tell you what it is in a second. All of a sudden, this number gave you the bottom, like perfectly. Come on. Why did you even look up 226? Because it randomly hit this number? Are you trying to find, like, you know, Jesus on a piece of toast here? What are you doing? Look, I'm aware of the trappings of, like, kind of a false confirmation bias where like you find something like one thing and then it leads to like another. You're like, it has meaning, you know, double rainbow. What does it mean? And I'm like, look, I get it. It could mean nothing, but the more and more I keep going, the more and more I'm like, it doesn't mean nothing. The fact that that is a flipped value is extremely important, because if you use an inversion of the formula, which is now what you're seeing on the chart here, you would have witnessed that hit that same value. And I knew this a long time ago, looking at these charts, that there was something up with this weird shift chart, because it was way too connected to everything that's going on presently, as if it's determined by like what's going on different layers of this chart. It does not make sense. And I'll show you what I mean. There's no reason, like there's basically no reason at all that this chart right here should interact with this chart over here in the future. Correct? There's no reason. Well, the angles are the same. Maybe one time that happens. But if it happens all the time, what is actually going on? When you look at the angles here and you do the charts, I can't even like begin to describe how confused I am by this phenomenon. When I go in here, like for example, what does this mean? Right here, this particular motion right here, right? This is the cross down. This is a very significant time for this stock because it literally is like the lowest RSI that we have between these two ends. It's extremely big drop off of 410. When you use an intersection there, you get exactly where this breakdown is happening right now. So what? Guess what? You can go into any number of these situations. You can chart from this way or down, and you will find that it actually charts to the inversion on the top and the bottom. So what the heck is that? What the actual heck is that? And I'm looking at it like, you know what else is peculiar? And I never even thought about this. These look suspiciously close to the targets that I've been finding on trajectories. What do you mean, Booksy? Remember back here when we dropped down and I'm sitting back here saying, oh, I think it could go to $8 to $9, and it never gets there. At that point in time, the variation here was $8 to $9. When we're looking back now and we're looking at where are those targets set up to go, we've been saying for a little while, I don't think it's going to go as high. I think it's going to go up to, at first I was like, well, maybe it'll go up to near 8. And then later I'm like, no, it's going to come down to here around 6. It's evolving. So this is the only thing I can think. And I guess in my brain, I'm like, there's just no other explanation for why this would happen. The only thing I can think is that this is basically like an elaborate Bollinger Band. It's like an elaborate standard deviation ratio. So like you're getting a standard deviation of where the chart could go on implied moves. And the reason that we're seeing those kind of predicted in the future, which is weird. And again, I don't even know how that's possible. Like, how do you get to this point where you're making the chart kind of connect to the past, but only in like the sense in which if you had gone, to the top? Those targets have been shifting as we've been moving around. And curiously, this is where things get really ridiculous, right? Curiously, when you look back, the only place that you come close to meeting the same value top to bottom is right here. And then my brain goes, because I looked back and I thought, where is the high level right there? And I'm like, there's no way that that's the implied move. But it is, because every particular trajectory that you look at and setup that you look at, this was already kind of baked into the chart, right? Basically, this goes up to where that, and this is the only place I thought about this previously. The only time I ever thought about this in the past was like, this is a weird thing. I was like, maybe it's like trying to get back to this old value. Effectively, this goes and meets the breakout value. And it's not even like a question of like close. It's like perfect. I don't know if you can see that, but it's like right on where that gap is on the low side. So what is this? Like an implied move that's always kind of moving along? Like, what does this even mean? I think if you considered it, for example, like a Bollinger Band, it would make sense, because if this were at this particular level and you had a big upthrust and you came back up to check it, it would be roughly at that level, right, by the time you came back down. If you're kind of looking at this as sort of like an easing motion, you could see it that way. Now, again, you might say, well, that might be true, but then there's this problem of like, well, it doesn't go back up to it every time, and ultimately it seems like it's trying to stay, if in this case, because of the way you've done it, it's always going to stay equal parts away, which is not the way that a Bollinger Band works, because you'd say, well, this would have been at the top of that Bollinger Band, this shouldn't have been way up here, even if it had been pressed up. And I would say, yeah, you're right, I agree. And again, I think when you look at this as a series of trajectories, and you consider this as a series of trajectories, again, you can see that this actually meets the bottom there, and it is in the appropriate spot. I had to test it. I had to, guys. I had to test it. I went back and I looked at the previous, and you're going to like it. You're also going to hate it. I went back and I looked at where the gap down value was. I did both upside and downside. So this is 1 over 226% basically, or yeah, this is 226%, okay? So one is a fraction, one is more. They're equal parts from the middle. On the reverse split day, this is it. This is what I was like, yep, there it is. Did I get the value right? Whatever this value represents, did I get it right? This to me was like, yeah. I had never done the downside one, and I don't know why I didn't. I just didn't. When you go back, this number is basically $20.50. When you look at where this ends up being in the future, it is the drop down shift according to where we were on August 11th. Okay, again, this is like the low end. The high end, look at where this develops, right? According to the low end. You guys are like, what the heck does that mean? What it means is that this didn't just shift once, it actually shifted twice, because if it had shifted once, then the value should have been right here, right? But that's on the split date. It's right on the split date. It's right back down to where it was percentage-wise. But then it goes an additional 50% down, which drags the top to now meet where the bottom was. So now the bottom band is the same as where the top band would normally have been, right? Does that make sense? So really it shifted twice. That doesn't mean it shifted necessarily double to 26%, but that could explain why we have sudden burst like we did in May with like $1 billion shares. Because I think what you're doing, and I'm going to get to that in a second, is you're actually testing like a phantom range in some ways. And I already kind of thought that, but like I went back and I looked and I thought, well, that's particularly odd. I decided I was going to use this measure right here and just see if it lines up, and it does. So when I did this shift value and I used these three tops, 1, 2, 3, it goes to the breakout bottom in May. So let me repeat that. When I use the lower band shift, right, it goes to the breakout bottom in May, which tells me that if you think about this in theory, we were right, because I've been saying that this is more or less like the accurate value. This is the way I was thinking about it previously, and I told you guys, like, if you look at this, this is like more or less where we are in relation to where the chart is. But if you think about it in like a different sense and rotate those two positions, right, then this is really where the chart is in relation to where we are now. So if you put one horse before the other kind of thing, it switches. Does that make sense? Which it should make sense, because if you're relating it to the past, then this green one would be more appropriate. Like, where should this be according to where this is? All right, that's more appropriate. That's what I've been doing the whole time. When you relate it to the future, like, where would this be? Where would this price now be interpreted in light of where this is, as opposed to the other way around? Like, where should this be as in light of what was? Now is where should the past be in light of what is? It's essentially just flipped around. So this isn't exactly like super profound, except that this intersection right here, again, kind of like solidifies in my brain that there was indeed an equal parts chart shift, and it did indeed replace essentially by two measures where the chart would have been, strangely enough. All right? That in and of itself, maybe not like the most profound thing, but still pretty darn interesting, I think. Then I go back and I look at these parallel trends, and this is where, again, I'm like, and it's dense, right? I know this is a dense material. It's kind of obnoxiously dense. I went back and looked at these parallel trends, and I was like, well, what am I missing here? Because, like, if the top is the full breadth of this is a huge area. You can't expect it to possibly go from bottom to top, right? But this doesn't ever go to the top. I mean, it never goes back up to 29. We already know that. It doesn't ever use the top range again. And then, therefore, you would say it doesn't necessarily ever have to use the bottom range again. But there's something really peculiar that happened when I went back and I looked at this particular setup. This is on the 4 hour. This is the way that I've got it measured. And this is where I started deep diving into more crap that you probably don't even care that much about, but it is the implications are huge if you think about it in terms of like a range setup. And I'm not saying that I fully understand it, but I think that the operators have been using this for a long time, whatever this variable might represent, the 226%. I couldn't believe my eyes when I went back and looked at where these levels are, I couldn't even like begin to understand this. I felt like something clicked in my brain that I just don't, it's like you see something like, I don't know, for the first time, right? And you're just like, what is this? I went back to the original breakout. I used the same thing, the big one from 2020. If you look at where we were right before the drop, and you look at that variable shift value, again, I could be a little off, I guess, on some things, but look at where we ended up when the price finally did move. That shift value then wasn't used exclusively in the current time frame. It was used here as well as an implied volatility, maybe of sorts, move. When you shifted up that equal percent, that is where we went to right here back in March. That there's not even like a question in my brain. Like that is the level. That's the upper level. It's there. It hits it on the head. It breaks out on the head. Like it's right there. Easy enough, plain as day to see. When you go to the bottom, that is the gap level. That is where the chart gaps up here. It finds a secondary support there, dips it, and it breaks down. It uses this level as the strength test level. What does that mean, Booksy? Well, it probably means that your theory about this being some kind of like a standard deviation on a macro scale is probably decently accurate, or at least it's pretty close. It may not be perfect. We don't know if it's perfect. But if that's true, then we should be able to test this and use it on a big scale and see if that works. The fact that, again, you had a range here where you're basically deriving two separate things. And another thing that's kind of odd is this variable motion. It's below it's variable because it doesn't actually match one-to-one. We can see it matches here on the peak, and there is a dip above. I thought this was very curious. Because when I went back, and I'm going to hide the two charts real quick, because like, well, there's not a lot that explains this move. There's just not that much that explains it. Like that move right there, if it went above the top, like, okay, it's just a massive extension, right? Correct. And I would say, yeah, it went maybe too far, obviously. But then when you look at the lower variable and you see that 1, 2, 3, 4, 5 times it went into this lower variable range. It's not the same number, but it is significant to me. And I'm like, that could have played a big role. If you are pushing beyond what is considered, let's just say normal in that case, is it possible that that's part of what gives you this extension over the top in the end? I think the answer is it could be. And we've seen this before in spring motions. It's not that unheard of for an SOS to do that. So what did you stumble on exactly? Is this just an existing range variable that's being used? And I think the answer is probably. And I think the reason that it showed up like in the shift chart is because they did use it as a shift. But before that point in time, and I couldn't tell you, I really couldn't. I couldn't tell you like exactly when this was established. Before that point in time, it was used specifically like when there's these breakdown moments. I find this to be extremely peculiar, like extremely peculiar. Because if you go back and you look at like this, for example, look at these two ranges here. I'm going to show you, I'm going to do it live. I've not even tested this, but I'm like, this is how confident I am that this is probably what's going on. Okay. When you look at these two values, you're like, oh, there's a chance it goes up here, right? On this breakdown. Excuse me. I messed up. My mouse is all janky. There's a chance it goes up here, right? Look at these kind of mid values here. This is where you have like like the creek starts really messing up and breaking down. Okay. It's like chasing a dragon's tail of sorts, because you could probably argue like, well, I should use only this or that level. Don't really think it makes a huge difference. I'm going to use these 3 markers right here. I'm going to show you the implications of this. Now, obviously, at this point, it's already like halfway down. I get that. But I want you to notice where those are here, here, and then ultimately where this one is, here. Why does that look like it's kind of like bound in and of itself, right? If it's a Bollinger Band, it's moving away according to a certain kind of a mathematical formula from the center mark. These would represent values of potential moves on these drops. Like you could have a drop here that goes down low and then comes back up again, sure, at some point in the future. But you wouldn't guarantee that, right? Because this looks like it goes way off the rails. Like it would never come back to that particular point. Correct? Yeah, you already know what's coming next. What the actual F, Booksy, is this? Hey, you say whatever you want about me being a little bit crazy. I'm crazy. I get it. But this variable number is nothing to stick your nose up at. It just isn't. It just isn't. In the key spots where there's these massive breakdowns, these represent price target variations that are super significant. Now you might say, well, eventually this is just going to like sputter out, right? Well, yeah, here it does. Well, as this is going down, right, you can keep looking backwards and saying like, did this set up those levels? The answer is yeah. I don't know why. I don't know, and I couldn't tell you. I don't know why this is setting up that percentage away and it becomes this like new thing. The only thing I can think is that as you're building a cause going sideways, there's a somehow like an algorithmic preparation for like how far you're going to go, and that those are going to be similar numbers probably because it's locked in, I suppose. I don't know. Like I don't really have any other real explanation as to why that would be the case. What I do know is that these are not probability markers so much as they are like real targets that exist, and we don't necessarily know what the probability is. Because like if I looked at this and I thought it's going to go up or down then back up, I may have done something like over here. I think it's going to go down and then back up again over here. It didn't do that. It went really, really, really low. But then when it does eventually break out, it kind of obeys like the more localized region, and then it also goes way back to these early levels. This is some kind of a variation of a standard deviation, but I don't fully understand it. I went back and I thought, well, let me see if it's still working, because that would be a big tell, I suppose. You know, it's possible that this is still working and at play here. Is it, is it possible this is wrong? Maybe that only existed in the past. Where's the big drop down here? It's right here. It's this region here. There's a couple different spots, but that's ultimately where this had broken down. It goes flat for a while, and then it breaks back out again. Where's the top on this? Where this is at? It's right here. It's 1340 up to 15. If we use like this whole area right here. Remember where it went to in after hours? It went to 1330. Which specifically, I've got it on the mark right there. It's like right there where it crossed down. What about the low end? Where did it go when it dropped? It's important to note that this being used in a past tense makes it look really easy. It's also important to note that this is very close to, like, as you would imagine, a 50% marker, right, for the ticker. So like naturally, if I go to the top here and I hit 1330 or whatever it is, and then I go to the bottom, you're going to get something in this area right here, right? You're going to get something in the middle around 5. Don't get me wrong. In retrospect, you could do that. But looking at this from the point of view of a breakdown or breakout, I think this is probably why, if you recall, back here when it dropped down, and I did a video about this at that time in January, I thought it was going to go to 14 and then drop all the way down to like 250. It went to 250 and then went up to near 14. It went the other way. I guessed wrong, I suppose, on which way it was going to go first. But the variables were already there. And it wasn't because necessarily that the 50-50 is always this correct principle, because you'd have to know where that 50% marker is. And if you don't know where it is and you're not really sure, you'd probably be like, well, this doesn't make any sense. How would you ever use this? This right here represents the same effective mark, though, that you can see everywhere when you break down. That being said, on a macro scale, this works hyper efficiently. And I couldn't find a place where it didn't work. I looked and I looked and I looked, and I was like, you know what? If you get this correct, if you look for the right spot and you know where that spot is, it doesn't fail. Like, it always ends up being that becomes like a 50% mark for the range, like a midpoint for the range. And then you end up with this variable 226% target on either side of that, which seems absurd because I'm like, why would that ever work? But then I'm like looking back and I'm like, well, wait a minute. What does that mean for stuff like your 180 level and things like that? Where does that ever appear? When you mark off 180 down here, that's where it is. That's the lower band that's being tested. Specifically, look at where the support is. Okay, now we're not using the same number here. We were talking about this as a resistance. But look at where that support is in the current time frame, and it's $4. And this is very simple, like really simple stuff, right? It is. But look at where that support is at 4. Look at where that 180 is here. What about the upper one? Give me some good news, Booksy. The upper one, which you probably already guessed, is right here at 9. Which, by the way, you didn't need all this information to see that, but if you have it, you can make that connection right here. That clearly was a level of contention and importance at 9. And it's a simple number. It's nothing fancy about it. It's $9, $4, $1.80. I mean, it's just, then there's slight variables to them, like you slight pennies off here or there, but like that's effectively like what we're doing here is we're going up and we're testing the top of the range. We're using this as an implied move here. So you can build a structure with this, and if essentially you're getting like an upper and lower bounds potential. What's the lowest here? That's about $1. Mathematically speaking, that might be why we set up where we set up. Well, what do you mean? Imagine for a moment that this, at some point in the future, dilutes pretty harshly. It's not worth $1, but it's fractionally closer and closer to that mark. When you look at the absolute bottom here, that 236 translates to about $1.06. It's very close to $1. Again, maybe I'm like fractionally off. I don't think that's a coincidence. And I think that the reason for that, and ultimately like why it kind of made the range where it made it in accordance with these shift values, is because it's basically setting up a floor, if you will, above $1 that you could like continue, like a pound cake, right? Just continue to press down against indefinitely. Well, that's given. Any stock in the market could do that. True. That's true. They could. Where things get kind of crazy to me is that I went back and I looked at this and I applied the same ideas, but I used the same principal ideas, but I tried to find that mark here. And here's what I found. And this is where things I think are, again, pretty interesting, though maybe not perfect. When you look at where you guys are like, wait, what the heck? What the heck, Booksy? Look at where the breakdown is. You're like, oh, it's full circle now. I said this was going to come back full circle. And here it is. I said this is why this is really significant. When you look at where that 178 is, right there. Right where you need it to be, right after you have the drop ledge on that breakdown. Now there's another one right here, and what's interesting about this is that there's two, but this one is really small. And this one we know based on experience that this is actually almost as similar or not the same as the previous. It's curiously like, I know this is going to sound really weird, but if you do like a halfway point, it's actually like right here. It's very, very strange. So if you look at the drawdown and you look at timing, the timing is actually right here of the halfway point. But that's not halfway up and down, is it? No, it's not. It's halfway left and right. But interestingly, when you use that halfway point up, and if you use that as like a timing mechanism, you guys are like, where's this going? I'm working on this part. You're getting to like where I'm at now, so you're going to have to bear with me a minute. So instead of using it like a level, like that's the halfway point as a level, if you use it as a timing mechanism instead, this is the halfway point on the drawdown. It's actually right here in February. So that's not halfway up to down. It's not. It is, however, halfway left to right, halfway across the time it took to come down. When you use that and you measure from the bottom there and then to the top, that ends up being the 50% mark. The variation here is not as large, but the goal was not to break back out again. The goal was simply, as you can tell, to get to here, which is the drop ledge, which is what I've always said, that there's always a reason to come back to the drop ledge. I said the same thing right here, that it was going to come back up to 14, and then I said it again when it came back up to 3, and I said it again when it came up to here, although this one went higher, and it didn't ultimately do the exact same thing, which is kind of nice. The problem with this, if there is a big problem, is that iterations are their own thing, which means that within each iteration, you'd have to do that measure according to itself, not according to this big move. The only way you can use this big move when something like this is going on would be to look at the kind of the macro motions here, right? And I think that these macro motions are probably correct. Now, I'm not saying that the downshifting is happening because they're trying to get it lower. I'm saying that when you look at this and consider the fact that this level ends up matching at 4, okay, the $1.78, and this is kind of the anchor, if you will, for much of this price movement, suddenly it kind of makes a little more sense when you start thinking about this breakdown level here at 491 and the weird offering level at $1.78, and why in the world then was that made up here effectively in like a middle. If I were, I guess, aware of everything that the stock was doing at all times, which I'm not, but if I were aware of everything that the stock was doing at all times, I might have known in advance that the peak here at 570 and then the inevitable possible bottom that could exist on this variable would be at $1.78. That would be a kind of a guarantee that they're going to get their money's worth because we don't think it's going to go below that number. It's like a threshold, right? Notice where the 50% then is and where we're setting up. So what's the good news in this, Booksy? Because now I'm starting to get worried because it seems like if that's the case, then this could just be like a massive, massive, massive S-curve. And what I would tell you is that it is, because we've already discussed this. We've already talked about how there's a possibility that this is a big S-curve. And we've talked about that that same possibility was present in 2020 as well. What we didn't necessarily know for a fact, although there are certain reasons why you might expect $1.80 or $1.70, and there's lots of them, lots of ways to get that target. What you may not know for a fact, you could imply that that's probably where it would go. The challenging thing was like knowing that this was the middle, and I think you could have, I think at different times we've kind of estimated it. This number is like 315. It would have been enough, I think, and we've looked at this number before because it came up a lot before. I think I said 316 to 318. But the main reason for that being such an anomaly number was back here when it dropped backwards and retested the creek, it came back at like 316. And then it rose. So if you're going to distribute here and then walk down through it, this would naturally be like an anchor point. Notice now what the iterations are doing. You guys are like, this sucks, Booksy. Yes and no. Notice now... I get it. It's not fun to look at this like it's going to drop off the face of the earth. I get that. But notice now what this is doing by iterating these walk downs. Where are we now? What's the last one that was just made that kind of changed character a little bit? This as a springboard for going lower. But there's not much I can do about it. Just hold on. Crashing. It's trying, but it's not working out. I don't know, man. It's really janky. Yeah, it says that it's got no data. My stream thing says there is data, so it might be YouTube this time, as YouTube is acting funky. All right, well, I'm going to keep pushing on. If it works, it works. Why I think this is important. Yeah, it's kind of working. It's kind of not. I think that knowing that 180 was always a possibility has kind of lessened the blow on this and made it feel a lot less severe. I think thinking about 226, which I've got it on the chart here as a potential, it's also kind of similar. We are chopping quite a bit, so I apologize. I don't know what's going on. There's nothing I can do. I've already kind of got everything maxed out here. Quit this. Might help. So there's something really important to know, and I was trying to get to the point there because this is all talking about like past tense. So hopefully we'll still see you guys in just a second. It looks like this thing is like really dying. It's struggling super hard. Stay up. So it's not looking because it's really janky right now. So they're throttling me. It's noon. They always do this, man. Every day, like noon, it gets really bad. Bummer. All right. Well, I'm going to pretend like things are fine. I'll keep looking over, but